Hello, this is Mike again with the NetPicks Options Academy. This is the midweek recap for Wednesday, November 18. So markets right back into full-blown bullish mode here this week. If we go back to the end of last week, if you watched the weekend recap video on Saturday, I talked about, we had the attacks over in France. We had some very nervous looking markets where we were expecting a gap to the downside Monday morning. Sunday night, the futures markets opened, and we did see that lower open. We saw some very weak markets Sunday night. Markets opened Monday morning, and really ever since the opening bell on Monday, you can see it right here on the daily chart of the S&P. The last 3 days, very, very strong move to the upside. We've gone all the way from 202 up to almost 209, straight to the upside without any selling pressure in there at all. So a very, very impressive move, especially when you take into account what we've seen over the past couple of months. This move all the way from 187 up to what, 212. Okay, we saw that big move to the upside. We got a tiny little pullback here, and what fascinates me is you right when we got to this low here last week. We've already seen people call for jump in, buy the dip, jump in with both feet, and that's fascinating to me because we're only a few percentage points off of all-time highs. Okay, it felt nasty while we were in that selling there for a week and a half. In reality, that was a tiny little blip on the radar. So, it's still a very, very strong market. Every single dip is being bought. There are some concerning things under the hood. When you take a look at the internals, it's really not broad-based buying. When I get to the charts here in a second, you're going to see that a lot of this move to the upside the last few days has been led by a couple of big leaders. I'm thinking Amazon, Apple, Facebook, Google, Netflix, the same cast of characters that have led us to the upside for most of this year. Okay, other than that, there's still a lot of weakness in the rest of the market. So we've got to be very cautious here. Okay, this is not the time, in my opinion, to jump in with both feet and play the upside. Okay, I know you're going to hear about the Santa Claus rally, and historically, the end of the year is a pretty strong time of the year to trade. Okay, that might be true. We don't know. Every situation's different from year to year. I don't think that, you should just go in and buy because it seems like the market ends the year strong every year. I don't think that's a smart approach at all. I think you take what the market's giving us right now. The market's very, very strong. Okay, but it's overdone yet again. This is a huge move to the upside so far this week. Volumes, they aren't great. Okay, that's something else to keep in mind. So am I playing the long side? When I show you the charts here in a second, I am, but I'm being conservative. I'm taking more spreads. I'm taking smaller position sizes. I'm using the options to help me be more conservative. Okay, so on the upside, where's the next area of resistance? Well, the next area is where we stalled out a couple weeks ago, right at 211.75 or so. Ultimately, if you look way back over to the left, we've got the high from earlier in the year at 213.78. I'm seeing a lot of people calling for that level to be hit by the end of the year. I think that's aggressive. Okay, if we hit that, we'll take it. We'll just take what the market gives us, but I fully anticipate some selling pressure here before the end of the year. Why? Because everybody is now bullish yet again. Everybody is expecting us to move right back up to the highs. So typically the market likes to do the exact opposite of what everybody thinks it's going to do. Okay, so I'm looking at 211.75, 213.78 as areas of resistance. Now that we're breaking back up above all of our moving averages here, which we just did today at the close, all of those moving averages below us are now areas of support. Okay, so we've got 207.50, we've got 206.50, 204. We've got a lot of key areas of support below us that have held. Okay, if I take a look at the chart of the Dow, you're going to see a very similar story over on the Dow ETF. Okay, the charts are eerily similar. So 180 up above us, the next area of resistance, and then you can see the cluster of moving averages as support here. So, we've come a long way the past 3 days. It feels like it's getting a little tired, so be cautious. Don't sit there and jump in with both feet at these levels here. It's options expiration week here this week, so it's typically, expiration week typically favors the long side. So I would anticipate kind of a drift here the next couple of days to the upside. Next week, I think, is going to be key. Can we get some two-way price action to come back into this market? I would fully anticipate some profit taking considering the massive gains that we have had here over the past few days. So on the NASDAQ, 115.47 is the high from a couple of weeks ago. We're a stone's throw away from that level. I mean, we could get up there very, very quickly here over the next couple of days. Down below us, we've got all of these moving averages, so a ton of support levels below us that we'll want to keep an eye on should we decide to roll back over to the downside. So another reason that you will want to be cautious, just look at the attacks over in Paris. Okay, it doesn't take much these days. A terrorist attack can come out of nowhere, right? There's no pre-warning of that. So you want to be cautious here. All it takes is another terrorist attack or a Fed speaker to slip and say something that they shouldn't, and all of a sudden the markets are in chaos again. So I don't believe now is the time to be trading 100% position size. Yes, we can be active, but be more conservative. That's the approach that I'm taking, and that's what I'm encouraging many of my students to do also. Let's take a quick peek. I don't always do this in these videos. Let's quickly take a look at the internals. These market internals charts, these kind of just tell me how strong things have been throughout the day. Because I'm not able to track the markets from opening to closing bell, these charts really just help me get a feel for how strong the market is. And no doubt about it, these are some of the strongest internals here this afternoon that we've seen in quite some time. Okay, the rally here the last couple of days to start the week, the internals weren't that great. I mentioned that a few moments ago. This afternoon definitely changed that ball game. 9-1 on the up volume versus down volume on the NYSE. Okay, that's telling me that there's way more volume going into the names moving higher on the session. Okay, at a 9-to-1 ratio. That's a very strong reading. On a strong day, we like to see 2-to-1 positive. So we're way stronger than that. The advanced decline line, plus 1,600. This afternoon was the first time that we've seen broad-based buying. Up until this afternoon, it's just, like I mentioned, the buying was really centralized in those market leaders like Amazon, Apple, Netflix. We're starting to see that change. We'll see if this is the exhaustion move that we've been waiting for. Now, we did see some major buying extremes here this afternoon, at least intraday. We had the Fed meeting minutes out at 2 p.m. today. We did see a number of plus 1,000 readings here this afternoon. So that was really the first time all week that we saw very strong buy programs come in across the board. So, we'll see if this is the exhaustion move that we needed to see. I'd love to see some two-way price action here on the rest of the week. You can see this chart. This is a 5-minute chart of the S&P. This is, you're looking at the past 3 days here. It's been a pretty straight shot higher on the S&P, the SPY. We've had very little selling pressure. So I would fully anticipate over the next couple of days to get at least some selling pressure to come in here. And we'll see if that materializes into anything. Let's talk through some of the charts here. What are we looking at the rest of the week? Unfortunately, if we go back to the weekend recap, this past weekend on Saturday, we had a lot of short setups in play, and we were looking for a gap to the downside on Monday to see if we could book some profits. We were able to book some profits, but a lot of these trades got taken out either at break even or with small profits. You can see this short trade here on Apple. We got very, very close Monday morning to full target. We ended up getting taken out with a partial profit on our trailing stop right here. Now we have a long setting up at 119.11. I'm hoping that this trade does not trigger in over the next couple days because I don't really want to chase at these levels. I'd rather see some pullback before we jump into a long trade. So we are flat, but we do have a long setting up above 119 on Apple. Some of the other names that we looked at over the weekend, some of the financials. Here's Citigroup. This is one where Monday morning we were telling our students, hey, we're 95% of the way to full target. Okay, lock in some profit at these levels. So we actually locked in a good amount of this profit here. It wasn't a full target. It was a really nice partial profit, and we were able to sneak out before the rally kicked in mid-morning on Monday. And now we just triggered into a long trade here today. So our targets 56.23 and 56.73. Stop at 53.21. A lot of these long trades I'm taking with partial position sizes. I'm taking a lot of vertical call spreads here. I would love to sell premium. Okay, but the volatility has absolutely gotten crushed this week. If you take a look at the VIX, okay, even today, we are all the way up at 1950. We are above 20 here heading into this week. Okay, late last week when we got that selling pressure to end the week. The VIX is all the way down to 16.85 again. The VIX is getting crushed. The options are getting back to cheap levels. So it's difficult to sell premium at these levels on many of these names. So a lot of these long trades, as much as I would love to sell premium here, and most of them I'm either looking at some smaller long call positions or some call spreads. That's typically how I'm playing these. Goldman Sachs, we'll zoom in there, take a look at the other financial. So we had our short trade that we talked about over the weekend. That one did hit full target Monday morning, so that was one of those where we were just able to sneak out of that trade Monday morning before the rally ensued. And now we've got a long trade that has set up. It hasn't triggered in yet. The entry point's at 195.35. We're just going to wait and see what happens here. I would love to see the market to pull back a little bit before we continue to chase this move higher. But if we do hit 195.35, I'll be looking at another long call spread there. I'm trading pretty exclusively in the December monthly options at this point. They've got about 30 days left. The market's been a little bit slow here this week as far as movement goes. I mean, we're not seeing the large swings back and forth. So with a slower market, I want to put a little bit more time on my side. I don't think this is the time to trade the weekly options. The monthly options in most cases are going to be much more liquid. So I'm trading almost exclusively here in the December monthly options. If we take a peek at some of the index products, so we had our short trade from last week. That one did hit full target. Okay, we then had another short trade that triggered in Monday morning. This one was a tricky one to catch because it triggered in right at the open. I did have some students that did catch it. It did end up hitting a loser. I mean, if it was taken, it flat out lost. I mean, we all know that the market turned around pretty quickly on Monday. So that one ended up losing, and we did trigger into a long trade here today. We got targets 210.34, 212.31. The stop is down at 204.85. So again, long call spread there with a small position size. I don't want to get super aggressive here with this market, a little overdone on the upside at these levels. Netflix, let's take a look there. Netflix has been absolutely amazing here the last couple of days. If we go back to Friday afternoon, I mean, we were all the way down around the 103, 102 level. Fast forward 3 days, and we're all the way up at 120. That is a huge move. When you start to talk about an 18-point move in Netflix, I mean, you can do the math. I mean, it's a $120 stock. I mean, that's a pretty impressive return. I mean, when you start to rally up 20% in a matter of 3 days, that's a huge move. So the system did book the winner. This was actually a day trade. I mean, we don't typically take a lot of day trades here, but when you're moving 20% in a matter of days, you're going to have some day trades in there. So that was a really nice winner for us yesterday. We then triggered into another trade here today. We actually talked about this in our training room with the rest of our students here today. We actually took this, but we took it with a call spread. We took it with a smaller position size. We have targets up at 122.06 and 125.19. The stop at 114.61. So we want to be conservative. I mean, it's already moved 20% in the past 3-4 days. Let's try to be cautious here. Let's respect the system. We still need to take the trade, but let's try to protect the profit from the earlier long trade. So that's been a couple of really nice full winners in a row. That short trade last week followed up by this long trade. A lot of profit there to be booked on Netflix. Some of the other trades that we talked about in the weekend recap, Baba. We had this short trade that did sneak out of a full target on Monday morning. So we were fortunate that not all of them, but there was a number of trades that were able to sneak out of profits Monday morning before this massive rally kicked in. So we did sneak out of a full winner there on BABA. Really nice trade. And the system also triggered into another short today. Entry point at 76.36, target 74.07 and 71.39. The stop at 79.64. So, even though the overall market's strong, we have to respect the system, and the system is telling us to play the downside on BABA. So if we do get the market to pull back over the next couple days, we could be sitting pretty there on that short trade. Let's talk about the airlines. That was another one that I wanted to address, because this is a great example. We had this short trade that triggered in last week. Notice we hit our first target here. The stop went to break even, and we almost got taken out there. We were within pennies of getting taken out at break even. Had we not had our calculator there printing the setup for us, we probably would have jumped out at that point, right? We never hit the stop. Price action reversed right back to the downside, and that made a huge difference, right? Because it allowed us to hit the full target. That full target was just hit today, and we closed out of our full winner. So a nice trade there on American Airlines. So for the most part, have we been able to get through this this crazy week here? Yeah, I mean, we've been able to get through it with some nice profits. Have we been perfect? No, we've had some losers mixed in here as well. I mean, we talked about a loser on SPY. Let's take a look at XLE here also. This is the energy ETF that we trade. We had a short setup. It triggered in late last week. This one stopped out. We got taken out of that trade, so unfortunately this was another loser, but we did trigger into a long trade here today. The entry point was at 68.50. It's going to put our targets at 69.56 and 70.91. The stop is down at 66.54. So we're trying to play a bounce here in oil. It's getting a little overdone. If we take a look at the futures market over here, we got down. We tested the 40 level on the futures market. So oil has gotten beat up again the last few weeks. Definitely anticipating a bounce to the upside, and we'll see if it materializes. I would love to see it happen over the next couple days to end the week, and we're positioned well. XLE did trigger into a long trade here just today. So we'll see how that one plays out. We'll wrap it up here with gold. GLD, gold and silver have just absolutely gotten killed here in the last couple of weeks. I mean, we're breaking records over on silver. SLV, it's been down every single day for about the past 3 weeks. 2.5 weeks. I mean, it's amazing what we're seeing. So gold is in a short trade. We booked our full winner on the downside. We talked about that last week. We have this other short trade that's in progress. We have targets at 101.54 and 100.43. The stop at 104.48. So I would love to see one more push to the downside. Okay, what we did here, we're in the short trade, but we cut back on our position size. I mean, we've been to the downside for the last couple of weeks straight on GLD. I don't really want to continue to chase that move, just like we're trying to be protective on the upside on SPY, on names like Netflix. I'm doing the exact opposite here on GLD. I don't want to continue to chase on the downside. So we're in the trade here. It's just a smaller position size. We're trying to protect the profit from the previous trade while at the same time respecting the system and staying active in the market. So I've been saying it the last couple of weeks. Really we'll extend that out. The last 6 to 8 weeks, I've been preaching to everybody, this is my favorite time of the year to trade. It's historically a time when we see good swings back and forth, and that's exactly what we're getting. We've seen moves to the downside. We're now seeing moves back to the upside. It's a great time of year to trade. It's just there's been a ton of profit here the last couple of months, and I see that continuing here at least for the next, I would say we've got about a month yet. We have about the next month, and then we start to get closer to Christmas, and then all bets are off. Things will probably slow down for a week or two as we head into the new year. But for the time being, this is a great time to be active in the market. So if you have any questions on any of the setups that I talked about or anything that I'm looking at here to wrap up the week, as always, send me an email, mike@netpicks.com. I'd be more than willing to get back with you with more details. So let's see how we wrap up the week, see if this bull market continues. Probably a little overdone. I would expect some selling pressure tomorrow or Friday. Nothing significant. I just think a healthy pullback would be great to see. So I'm going to go ahead and wrap this video up here. I will be back over the weekend with a full weekend recap. So happy trading, everybody, and we'll talk to you over the weekend.